Good morning, all of you. Welcome to our channel DEBITO Baba. This channel totally dedicated to the commerce students. It is for the commerce students, of the commerce students, by the commerce students. So in this video, we are going to discuss, as it is indicated from the screen, that is past adjustment. But before going to our brief discussion, I will request all of you, please subscribe our channel, please like our video if you have liked, and share this video to your friends to enhance their knowledge. So in this video, I will try my level best to clear about the idea about the past adjustment. My dear students, past adjustment is a combination of two words, that is past and adjustment. Past means in the previous years certain mistakes committed by the partnership firm, and that particular mistake they have to be rectified in the current year. So it is after preparation of the final account of partnership firm, if any omission or error observed in the books of accounts, then that particular error has to be adjusted. So past errors in the final account to be adjusted in the present accounting year, and that particular adjustment, as you know, in our accounts, anything which we have to do is through the journal entry. So for this also we have to pass one journal entry, which will be by a journal entry we will adjust the omissions. So in this chapter, our prime objective is to pass one single adjusting entry in the books of accounts for the committed errors. So this error word we have already acquainted in our 11th standard. In the 11th standard, we have read that rectification of error, isn't it? So whatever with the error we have made by passing a journal entry. Having said that, our topic past adjustment, previous year error in the final account, after preparation of final account, has to be rectified in the current year in the partnership form of business. But in the class 11, we have rectified error before preparation of TB, after preparation of TB through suspense account. After preparation of final account, we have not studied there because that is not part of your syllabus in your 11th standard. So this is the missing link for the understanding of the past adjustment topic in the partnership firms. So why it is called missing link? Because if you'll get idea how the errors which will rectify after the preparation of trial balance, generally the errors which are rectified after preparation of trial balance is made through your profit and loss adjustment account, right? So I will take 3 illustration here, right? You just note down in your copy also, simultaneously by watching the video you can note down also. Installation expenses of machine 5000 debited to wages account. So this particular error we have come across after the preparation of final account. So this is installation expenses is a capital expenditure. So generally the journal entry will be the machinery account should be debit, but they have given debited to wages. So for this entry, after preparation of the final account, if you adjust this entry by rectifying entry, if you pass, the entry will be machine account debited to profit and loss adjustment account. Machine account debited to profit and loss adjustment account. Why machine debited? Because we have not recorded as machine, and wages we have already debited that, and the trading account gross profit came down, and which will affect ultimately net profit also came down. So for that reason, what we will do, machine account will debit, profit and loss adjustment account will go for credit. Salary paid 6,000 debited to wages account. Salary paid 6,000, so it will not affect the profit of the organization. So here no need to pass any kind of entry, because the profit is not affected by this particular mistake. Interest and loan 600 not recorded. Now this is after preparation of the final account. If this error occurred, then what we'll do, one entry will pass. Interest on loan account profit and loss adjustment account debited to outstanding interest on loan. If we'll pass this entry, what will happen? Here profit will come down and outstanding interest will be liability. It will shown in the balance sheet. So at last what will happen? The net balance of the profit and loss adjustment account will be adjusted in the capital account. So this is the point, right? The net balance in the profit and loss adjustment will be adjusted in the capital account. That means the conclusion point here we can draw is that whenever any mistake observed after preparation of the final account, that particular will be adjusted in the capital account by passing rectification entry. That means the capital we have to increase or decrease, and the other items we have to go for debit and credit. Now, in the partnership form, if you see the partnership form, the whole things what I have discussed, that is particularly sole proprietorship form. But here in the partnership form, same process we have to follow in the partnership form also. Partnership form final account consisting of trading and profit and loss account, profit and loss appropriation account, capital account, and the balance sheet. For trading and profit and loss account, we have to follow the same thing, but that is not in your syllabi, 12 syllabi, because 12 syllabi is totally focused for the profit and loss appropriation account and capital account. In our future discussion, we will discuss about this, all the mistakes, we will go for that. But first we will clear our idea. What is the focus point is here is that if any mistake observed related to the profit and loss appropriation account, and for that mistake we have to pass one single adjusting entry. So profit and loss appropriation account, to understand this particular topic, one should be aware or mastery in the profit and loss appropriation account. If anybody is very strong in the preparation of profit and loss appropriation account, then I think this particular topic will not be difficult for him. It will be a childish work for him if he will understand the topic seriously. So profit and loss appropriation account. The profit and loss appropriation account, we know it is an extension of profit and loss account, and it shows the distribution and application of profit between the partners. So error related to appropriation, errors related to appropriation, we have to focus here in our topic, error related to appropriation. Omission of IOC, that is interest on capital, omission of interest on drawings, omission of salary, omission of commission. These things, if the partnership firm has omitted, they have not entertained in their books of accounts, and they have distributed their profit. So to rectify the mistake, we have to pass one single journal entry. Even if in our given situation they have omitted everything of the partnership deed, that is interest on capital, interest on drawing, salary, commission, but the profit sharing ratio what they have agreed upon, in that agreed profit sharing ratio they have distributed the profit without considering the partnership deed terms and condition. That may be one type of error we'll find in future in our numericals. Next is your wrong profit sharing ratio instead of agreed ratio, right? In certain numericals you will find they have omitted the terms of the partnership deed, and side by side they have not used their correct profit sharing ratio. So in total I can say past adjustment we can divide in two groups. One is, in one group we can say only they have committed or omitted the appropriation part. In the other part I can say they have omitted the appropriation part. Side by side they have used the wrong profit sharing ratio, right? So we'll discuss one by one, right? If they have only omitted the terms of the partnership deed, that is IOC, interest on drawings, salary, commission, etc., and they have distributed the profit. While distribution of profit they have used the agreed ratio. That part they have done perfectly, but only part, appropriation part, they have not done perfectly. So in that situation our job is very easy. What we'll do, I will show you one slide here, we'll get idea. Just a minute. This is the see. So this is, see here one question I have taken. For example, A, B, C are partner in a firm. They have contributed 2 lakh, 3 lakh and 4 lakh capital into the business. It has agreed between them that interest on capital will be allowed 10% per annum. It is mentioned in the partnership deed that everybody will get 10% per annum interest on capital. During the year ended 31st March 2020, profit was distributed in between them in their agreed ratio without providing IOC. That means whatever profit they have earned during the year, they have distributed without providing the interest on capital. And their agreed ratio, in this question the agreed ratio is not mentioned. So that means, as we know, provisions of the act, if the partnership deed doesn't provide any kind of ratio, then it is equal. So their ratio is equal. So what we will do, we will straight draw one table. That table is known as adjustment table. I have forgotten to note in the above the table, that is adjustment table. So adjustment table, particulars A, B, C, total, right? A, B, C, total. 3 partners, 3 column, 1 column is total extra. What we will write here? We will first focus what are the things they are going to get from the partnership firm, and what the things the partnership firm has omitted. Or they have omitted interest on capital, they have omitted. So I will write here interest on capital to be credited 20,000, 30,000, 40,000, in total 90,000 already credited. Now this total 90,000, this is our pathfinder. This 90,000 already credited because they have taken the profit now. Without providing this 90,000, they have not provided. Then where that amount has gone? That amount they have taken. Already taken. So already credited rupee 90,000 as share of profit in 1:1:1 ratio. That is 30,000, 30,000, 30,000, total 90,000. Just compare. This particular A has to take, or he should take 20,000 as IOC, but unfortunately he has taken 30,000 as share of profit. That means 20,000 he has to take, he should take, but he has taken wrongly 30,000. So he has taken 10,000 excess. So we will reduce, we will give punish, and we will debit his. So 10,000 we have to debit. Now this particular B, he has to take 30,000 and he has taken 30,000. So there is no mistake for him. He has to take in total 30,000. He has taken 30,000. So he is perfectly balanced. Now this particular thing, see, he has to take 40,000. He has to take 40,000. But what happened? He has taken only 30,000. So another 10,000 he has to take. So we will go for credit. Remember, the partner who is going to get, we have to go for credit. And the partner who has taken more, we have to go for debit. So here the adjusting entry will be A's capital account debited to C's capital account. In our next video, we will discuss more about this. We'll go slowly and steadily, right? But till now, I think you have got a very good idea. If really you got benefit from this video, then please like our video, share our video, subscribe our channel. Thank you all of you. Debito Baba once again saying goodbye, signing out from this video. Thank you.